The stock market was really starting to scare me. About a week ago, the markets were sending very mixed signals. So what are we seeing now? What a difference a week can make. Let's go through the metrics to see how things look this week. And there will be a special review of the buying and selling pressure for Tesla near the end of this video, so stick around. Well, last week I said, and you can see this bottom confirmation indicator is shooting higher. This tells me the market is likely to go higher from here, but there's no guarantees. I do like what I see here, though. This looks promising. And thank you to my subscriber, Jack SYR9926, for noticing. All right, so let's take a look back over the past week, month, and 6 months to see how the markets look. And if we look back over the past 5 days or last week, you can see we had a very nice rally here with ARK ending up the week the most, and then the NASDAQ sort of edging everybody else out. But this looks like a fairly healthy rally coming off this bottom. Back here it looks like on March 29th when it started. And if we look back over the past month, the NASDAQ has absolutely been killing it. Very healthy rally here. ARK has been a little bit lagging here, but you can see the recent slope is very steep, which is good. And small caps have been lagging, which doesn't concern me. I like the fact that the Dow is performing worse than the S&P, ARK, and the NASDAQ 100. And what about over the last 6 months? Well, you can see we had a very healthy rally here. Then we had an unhealthy market here recently. And now it looks like we're again in a healthy rally with the slope of ARK and the slope of the NASDAQ 100 being higher than the Dow and the S&P 500. This looks very good. And what about the current bottom dynamics? Well, if we look at the current bottom dynamics, last week we were right here, right at this point. And if you remember, I said, it looks to me like the markets are going to go higher. Why? Because the markets were going higher and the confidence was rising. And the bottom confirmation indicator was shooting up here. Now it went back, pulled back a little bit here, but then really shot up. So this is really starting to look good here. And let's take a look at risk versus opportunity. Well, if you remember last week, this was giving me some angst because the risk level, this red line, was very high here, above 80, almost 90. And the risk acceleration was above 80. That's really pretty scary. But you can see what's happened since then. Risk has started to collapse. It's heading for 70. And risk acceleration has fallen through the floor. It's down here just in the low 40s. This is really a positive move here. And you can see while all this has been happening, the price of the S&P 500 has been moving higher very nicely. Now let's take a look at equity versus safety. This is a really great way to look at the market because these rankings move fairly quickly, so they give you a pretty close to real-time look at what's going on with risk in the markets. And what we have right now is a very healthy stock market. We have the NASDAQ 100 ranked number 1. We've got SPY, the S&P 500 ranked number 2. The Dow is here. Gold has dropped to 3. I like that, and I'll tell you why later. And we have a healthy Treasury market with longer duration Treasuries EDV ranked better than TLT. This is very healthy all the way around. I like the fact that cash is dropping down here. Now, the small caps haven't been performing well lately, but they'll probably catch up. I'm not really concerned. How does all this show up in the buying and selling pressure? Well, if we look at the Dow Jones Industrial Average, we had a big, huge spike in selling pressure back here, and you can see the price dropped, but then the price started rising and the selling pressure started dropping. Now you can see that since that spike here, the buying pressure has been steadily increasing, and this is really starting to accelerate. This looks very good. For the S&P 500, very similar picture, almost the same picture. Again, the buying pressure increasing, the price shooting up, and the buying pressure shooting up. This looks very healthy. NASDAQ 100, this has been the best performer. You can see a very nice price increase here, and the buying pressure has been stubbornly above the selling pressure. Now, it's not way above the selling pressure, but I like the fact that it's staying above the selling pressure. This looks very good. And the small caps, of course, they've been underperforming. You can see that here in the price decline. You can see that the selling pressure, just like in the other indices, really shot up here. But while this has been falling, the selling pressure has been in decline. So I would have to hazard a guess that this is going to turn around soon and start to go up unless all the markets go down. And what about ARK Innovation? Well, we've had a fairly nice rally here, a little bit rocky, but the selling pressure peaked out here and is in sharp decline. Now, hopefully the buying pressure will continue to rise here and will stay above the selling pressure. Now let's take a look at sector rankings because these give us a different perspective on the risks and opportunities in the market currently. And you can see this week, this is very healthy. I love the fact that cash and consumer staples have moved down here into the bottom half of this table. And you can see Bitcoin, technology. We've got ARK Innovation up here, consumer discretionary here. We've got the NASDAQ 100 ranked better than SPY and ranked better than the Dow Jones Industrial Average. This looks very, very healthy. I love it. What about sector rank acceleration? These move much more quickly and give you a more real-time picture. Now, the only thing I don't like about this table is that cash is way up here. I'm not quite sure what that's about. Hopefully that will start to fall off. But again, consumer discretionary, ARK Innovation, technology in the NASDAQ 100, these are all risk assets except for cash, and they are ranked up here. This looks very, very healthy. And how have the Treasuries performed over the last week? Well, you can see they bottomed out back here, sort of like equities on March 29th, and we've had a very nice rally here. The purple line is EDV, which are the longest duration Treasuries, meaning they're the highest risk Treasuries, and you can see they've outperformed TLT, and both of these have outperformed shorter duration Treasuries. This looks very healthy so far. And unfortunately, the inverted yield curve became a little more inverted last week, and it really shot up here, which is good because it was extremely inverted here at 1.1% inversion. And you can see that that moderated, but again pulled back here. And if you remember, in order for this to not be inverted, this curve has got to go up here and be above zero again, like it was way back here. Now, if we look at a daily chart, which gives you a little more detail, you can see that we were 1.1% inverted here, which is absolutely insane. And then interest rates tried to move toward not being inverted, and we've had this big oscillation going on here. Don't know where this is going to go, but again, for this to become not inverted, the Fed's either going to have to start lowering rates or rates at the long end are going to have to go up by a fair amount. And if we look at buying and selling pressure, you can see that for the intermediate Treasuries, these are shorter duration. The price movement has been very nice. It's been flat topping here, but what I don't like is the selling pressure is beginning to really shoot up here. Does that mean all the Treasuries are not healthy right now? I don't think so. Let's take a look. If we look at 7 to 10 year, what I call intermediate to long Treasuries, same picture as the intermediate Treasuries with selling pressure increasing. But now let's look at the 20-year bond, the long bond. Yeah, the price movement was similar. It went up here, flat topped, pulled back. But you can see during this, the buying pressure has been stubbornly ahead of the selling pressure. So this actually looks fairly healthy. This tells me that bond investors are willing to take more risk at the long end because they think we've seen the bottom in these Treasuries. Now let's talk about gold. When the banking contagion first broke and Silicon Valley Bank was in trouble, gold really started to shoot up. Since then, it's flat topped, and you can see the buying pressure has just been collapsing here. This tells me the markets think the banking contagion is pretty much over. And you saw the same thing in our next look, which is Bitcoin. Bitcoin had a very nice rally here, and just like gold, it's flat topped. Now it's trying to rally again, but you can see that the buying pressure has really collapsed here. So this tells me again that investors feel the banking contagion is over. There was a flight to cryptocurrencies and blockchain because they worked flawlessly through all of these problems with some of the banks. But that's going to take longer than just a few weeks for people to shift over to blockchain and away from traditional banks. So I think this has got a long way to go. And as I mentioned earlier, I'm going to do a special look at Tesla here because Tesla has been performing really well lately. You can see it pulled back here, but since this bottom, the selling pressure has been moving lower, great, and the buying pressure has been increasing, and we have a very nice upward turn here. This looks very positive for Tesla right now. So what do we make of all this good news? Look, the markets are starting to scream risk on, and even the Treasury markets are looking positive. The fact that gold and Bitcoin are flattening out and even declining slightly is good. It says the bank failure fears are subsiding and business is getting back to normal after several very scary weeks. That being said, we still remain vigilant, but a little less on edge as we work our way out of the tornado season and towards summer. I'm Calvin Rose, and thank you for watching Invest Smarter this week. That's all for now. All right, how we looking? As good as you can, I guess. Oh boy.